Stocks leap up after a tech rally pushes S&P 500 to a record high. Energy, metals, utilities and capital goods are big gainers, while consumer sectors, FMCG, consumer durables and autos drag.
Vedanta Limited floats an offer for sale to divest up to 1.59% of its 61.8% stake in Hindustan Zinc for over rupees 4,500 crores. The offer follows a sharp run-up in the stock of the silver producer on the surge in the white metal prices.
Consumer stocks take a beating, with Asian Paints leading the decline after a rain-marred quarter. Tata Consumer too dips despite a strong show, as do Marico and Godrej Consumer.
Crude oil surges at 2% overnight to a 15-week high following a severe winter storm in the US and Canada. The lower output and rising tension in the Middle East keep oil on the boil.
Maharashtra Deputy Chief Minister Ajit Pawar dies after his plane crashes in Baramati earlier today. A total of 5 people were said to be on board Pawar's private jet, including 3 passengers, 1 pilot and a crew member.
Hello, good afternoon. You've tuned into Halftime Report. We're coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Ekta Batra as well. Good afternoon, Ekta. And it's a good afternoon that's coming for the markets as well. Today, again, we're managing to see that the Nifty is managing to hold on to gains of 0.6% as of now, 25,300 levels. Almost near the day's highest point, what the Nifty is managing to trade at. The broader end of the market, that's doing well, outperforming the benchmark indices, whether you look at the mid-cap or the small cap, managing to hold on to strong gains. Mid-cap up almost 1%, small cap is more than 1% as well. So good gains coming in from the broader end of the markets. Energy, metals clearly shining in today's trading session. A lot of individual movers on the back of their earnings as well. Ekta.
Hi, Vinny. Yes, absolutely. You know, we have ONGC as well as Oil India, which are trading with good gains in today's trading session, as crude is trading at 4-month highs. We have a lot of results today as well. L&T, Maruti, ACC, SBI Life. So a lot to reckon with in today's trading session. But on the show today, we'll get you an exclusive conversation with Habil Karakiwala of Wockhardt on the latest developments with their antibiotic drug. In our What's Trending segment, we'll bring you conversations with the management of Marico and Asian Paints on their Q3 numbers. We'll also bring you excerpts of from the India Energy Week 2026.
Okay, Asian Paints, let's bring the first management on board. They reported their Q3 numbers. Unseasonal rain, shorter festive season impacted the performance. The company believes competitive intensity will remain high in the industry. In fact, my colleague Mangalam actually caught up with the management of Asian Paints and began by asking about the demand outlook. Listen in.
Yeah, I think what we saw was a little bit muted demand in October because the festival window, as you said, has been pretty short in terms of only the first 15 days and a prolonged monsoon. We saw definitely a strong pickup in November and December, and the December exit rates have been much higher from a quarter average in terms of what we are seeing. So I think from that point of view, it's a good indication in terms of both volume and value in terms of doing well across businesses.
All right. So, you know, when I look at your third quarter volumes, closer to 8%, but the value growth is a lot lower. You had earlier indicated that, you know, the value volume difference would be between this 500 to 600 basis points mark. It's been a little more than that. What explains this?
See, actually, if you look at from a point of view of overall coatings, we have grown at about 4.4% in value if you take the industrial sales. And the volume is about 8.3%. Overall, when we look at all the sales put together from a point of view of coatings. So we would say that it is still within that bracket in terms of what we spoke. And if you take all the businesses, as I said, industrial sales and everything, I think 4.4 is possibly a reasonable kind of value growth in the current set of demand conditions in terms of what we've been able to launch.
Right. And what do we, make of the margins? Because your range has been 18 to 20%. This time around, you've done 20%. Gross margins have been better than what the street expected. In fact, the higher end of the range as well. So do you expect your margins to be around this 20% mark, or do you think you will plow back some of these to, drive growth once again, and then the margins come back to about that 18%?
So overall, we have done a very, very strong work with respect to our cost structures, looking at a lot of cost efficiencies in the system, working on material formulations, cost efficiencies, which have kind of been driven very, very strongly, which has kind of given us a upping from a point of view of margins. We've also looked at pushing some of the, premium products where possibly the margins are much higher to that extent. And that is something which has given us possibly a little bit of elevation, which is coming with this overall margins. The deflation of about 1.1% has also helped us in this process. As we go forward, I think one thing which we are committed in the industry going forward, that as a leader, we would like to kind of see that how can we really increase the demand? How can we really invest more in the brand, put more money in the innovation, and look at bringing more technologies into the system? So we would say that we will continue investing heavily into the industry as we kind of go ahead. And we would kind of like to maintain this band of 18 to 20% PBDIT margins.
What about, something that was very interesting in your conference call where you said that maybe structurally the demand for painting or the frequency of painting is coming down. And that was very interesting because, the big thesis was that we paint a lot less than our global peers. What explains that, and what should we make of overall demand then, given this trend that you're seeing?
So I think as we look at possibly over the years, the painting cycle used to be something like 8 years or so. Now it has kind of really come to about 5 years. I think it's kind of now flattened out in terms of as a painting cycle as we see it. More importantly, what's happening is given the kind of consumption which we are seeing at a consumer level, this is still a discretionary spend which can be deferred at any point of time. And given the fact that today there are other areas of demand which are coming up, people are spending and really using the discretion very, very carefully. Especially, I may see that from a point of view of occasion-led painting is something which we are definitely seeing a structural shift, where it was supposed to be very, very high. Now it seems to be shifting to that extent. But all the more, I think there are more homes, and I think we would kind of see that possibly the painting cycles, while they remain the same, I think we have more and more numbers coming up, given the overall kind of population growth and homes growth which we are seeing in India.
So does that mean double-digit volume growth is sustainable fourth quarter onwards itself?
Yes, I think so, because I think we did about 10% growth in last quarter, about 8% now. I think we should kind of remain in the similar band in terms of going forward. That's something which we are looking forward to.
8 to 10% or 10% plus?
Yeah, in the band of about 8 to 10%, yes.
All right, in the band of 8 to 10% volume growth, value growth would be about 5 to 6% or 4 to 5%?
Yeah, the gap, I think, which we have been saying about 5%, I think 5 to 6% kind of a band will remain.
All right, so 5 to 6% revenue growth, 8 to 10% volume growth, and EBITDA at around 18 to 20%. What about competition? Do you think the worst of disruption is behind us and going forward it's going to be steady state for everyone?
I don't think so. We will reach a steady state. I think there is a lot of activity which is happening. The competitive intensity will continue. We also have now, consolidation happening in the paint. And to that extent, I think overall, the area of competitive intensity will continue. We will have to be really up on our toes in terms of really the kind of work which we are doing in the market, whether it is innovation, whether it is in terms of newer initiatives, whether it is from a point of view of things which possibly the market has never seen. And that is something which we are looking forward to in terms of bringing a lot of changes as we kind of go ahead.
Right. So when you say that it is going to stay, in what manner will it stay? Will it be in the manner of pricing disruption? Will it be in the manner of distributor discipline? It will be in, some lures that are given to the consumer. Will it be at the cost of margins for everyone? Can you define competitive intensity when you say that it's going to sustain?
See, traditionally, what we have seen is that the distribution structures have reached a particular maturity. People only look at only spreading the distribution structure and having more and more retailers in their game. That possibly would continue. I think more intensity will be in from a point of view of pricing in terms of how people look at really pricing, how people look at intermediaries in the market to that extent, how people look at the B2B market from a point of view of reaching out directly and so on and so forth. So I think a lot of intensity would kind of coming from the areas of pricing, discounts, and people trying to reach various segments very differently.
Okay, so that's the management of Asian Paints. That stock is under pressure, down around 4% odd. The management commentaries seem to have possibly spooked the markets a little bit, and a little bit of an underwhelming quarter, though the management is indicating that they will maintain margins between that 18 to 20% band going forward. We'll take a break, but a quick heads up as India gears up for the budget 2026. The big questions around growth priorities, reforms and the road ahead take center stage. Budget Vision 2026, what India wants, brings together top corporate leaders, economists and policy thinkers to share their views on what they expect in the upcoming budget announcement. Watch Budget Vision 2026 on 30th January, 10 a.m. in New Delhi. Welcome back. Well, for the markets, it's holding up quite well. We have the mid-cap index, which is up around 1% at this point in time. So definitely the broader markets are faring better in today's trading session. We have the advanced decline ratio, which is positive as well. So around 2,800 stocks advancing to around 1,300 stocks declining at this point in time. But let's continue with our What's Trending segment. And now we're focusing on Marico, which reported what was a good set of Q3 numbers. The profit has risen around 13%, while the margin has contracted. Our colleague Mangalam did speak to the management and started by asking on their near-term volume target. Listen in.
As far as obviously the copra prices have corrected, and we need to ensure that we take some pricing action maybe as we move towards the next quarter. I think the hyperinflation obviously had an impact on parachute volumes because of the absolute pricing. Also, we had taken some MLH correction, which led to a 2-3% volume drop. So I think volumes going forward is going to stabilize. We will continue to aspire for delivering a high single-digit volume growth as a base case and try to improve upon it. And obviously, as the copra prices come down, margins will continue to improve in the subsequent quarters.
All right. How much will the margins improve because of just raw materials, and how much will it improve because of the mix? Because we've seen value-added do well as well, and alongside that, you are seeing some recovery in the operational performance of your digital-first and premium brands too.
So I'll give you a longer-term perspective. Obviously, the value-added hair oil growth, which we are confident about delivering now consistent double-digit growth, is leading to a mix improvement. As far as the digital business is concerned, we expect digital business to grow 2.5x of the run rate and moving into a 10% plus EBITDA. I believe that at least in the immediate term, next year, I think mid-teen kind of a growth in bottom line is a base case. And we will aspire to try to do more, which will translate into at least a 150 to 200 bips margin expansion.
All right, 150 to 200 bips margin expansion. Now, you know, it was very interesting when just a day before your results board meeting, you announced the purchase of 4700 BC. And it's a business that does an annual run rate of what, about 140 crores on the top line. What can you scale it to? Are you looking to, you know, include it in the Marico overall distribution system? Because that's not something that you've been doing with a lot of the acquisitions that you've made so far. You allow them to run their own course. What's the scalability, margin synergy and opportunity out here?
Firstly, I think it's we are very excited about this acquisition, because if you really look at it, we have been focusing in the food business with wellness and health. This is a better for you gourmet snacks, and therefore it opens the TAM significantly. And I think we are seeing a very great tailwind of people wanting to do in-home consumption of snacking as trends like OTT, people, you know, having a lot of in-house consumption of snacks, as I talked about. Now, if you look at this brand, obviously there was some part of the business, which is a very small part, which was being sold in PVR cinemas, which will continue to have that arrangement. There's some business which is sold in some of the international airlines, which I believe is a very, very good market because it drives trials and saliency for the brand. And there was an online sale. Now, obviously, as we move into the Marico system, it gets access to definitely to the entire modern trade, which will be a driver, and premium food outlets. We see significant synergies in cost and other operating model between, you know, some of the other fruit brands like True Elements and this. And therefore, while there will be an accelerated pathway for both True Elements and 470BC to break even. We also will generate enough cash from this savings to drive investment for accelerated growth in these brands.
All right. So multiple of the current number we can expect shortly itself, right? Given the sort of distribution unlock that happens.
So I think we aspire to move it to 500 crores in next 3 years.
All right, 500 crores in the next 3 years. What about the other acquisitions that you were eyeing? It's widely reported that you are in talks with a plant protein maker as well. Anything that we can hear in the very near future? Can you tell us whether talks are at an advanced stage or there are no talks either?
We can't comment on speculative reporting. I think we continue to look at acquisitions in the digital businesses to plug some of our gaps in our portfolio. So we can't comment on anything specific which is speculative.
What about competition in the hair oil space itself? Because it's now an increasingly mature market and, one of your peers, Bajaj Consumer, reported industry-leading performance, obviously on a very favorable base. How's competitive intensity been and how do you plan to, keep your edge ahead in a post-GST world?
I think two things. One, I believe there is enough opportunity and headroom for growth in the value-added hair oil space, which includes premiumization, the vectors of problem solving like hair fall. It is good that, there are multiple players wanting to invest behind growing this category. This category has enough opportunity for growth. The GST rationalization has helped in affordability in pricing, which drives some of the unbranded or moves volumes from unbranded or smaller brands to larger brands. And therefore, we are extremely confident. If you look at even on a 2-year CAGR, we had X of Shanti Amla, which is a bottom of pyramid where we are not investing and defocused a bit. We have a double-digit growth in volumes. And therefore, we are extremely confident of value-added hair oils driving double-digit value growth over the next couple of quarters and even the next 2 to 3 years. And it's good that actually there is competition investment, because what had happened in the past 2 years till we repivoted to this strategy some couple of quarters ago was that too much investment was happening below the line and too much of irrational competitive activity was happening. So we welcome this, the fact that, multiple companies investing behind growing the category.
All right, just a final question before we let you go. Saugata, you've been on this diversification journey for Marico, and as we look at it right now, about 25% comes in from foods, digital first and premium personal care. Around 20% plus comes in from international. So nearly half of your portfolio has diversified away from the oil business. And in that as well, the oil business, you have rigids, which are a lot lower than, say, food or value-added hair oil. How much more diversification is on the cards from here on? And what's your overall aspiration, say, over the next 3 to 5 years?
So we have, there are 3 vectors of diversification. One which you alluded to in India, where we are driving foods, digital, and as well as premium personal care. It is extremely critical that this continues to grow while also becomes profitable. I think we are keeping a sharp eye on the profitability. There is also 2 other diversification which is happening within international business. We are reducing single country risk. At the same time, a portfolio. We are now available offering shampoos in multiple markets. We are there in baby, we are there in skincare. And therefore, there's another level of diversification that is happening. We believe that there are very few global Indian brands, and Parachute Advanced has a huge opportunity to become a global Indian brand. It's available today in 48 countries, and we want to push that envelope as a brand which drives, care and nourishment.
Okay, that is the management of Marico on their Q3 numbers and the expectations going forward for their businesses as well. But on that note, we're going to slip into a very short break. The countdown for Budget 2026 is underway. The most influential voices decode and analyze the impact and policy decisions from Finance Minister. We bring you a power-packed lineup throughout January and on the day of the budget. We are market veteran Ramesh Damani as well as Helios Capital Sameer Arora for all things market, followed by JP Morgan Sajid Chenoy to discuss the macro signals. We also get you insightful analysis from industry veterans and Dinesh Kanabar as well as Ashok Wadhwa for the tax rhetoric. Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is at 25,280 levels. When we started the show, it was just around 25,300 levels, now slightly below that. So we'll watch out for that. Nonetheless, managing to hold on to gain, slight bit of a fall from when we started the show. But which are the stocks that are moving around in today's trading session? Let's go across to Vivek to give us the list of the buzzing stocks. Good afternoon, Vivek.
Well, good afternoon. It's a very positive day that we're seeing, especially as far as the broader end of the markets are concerned. Advance decline ratio skewed in favor of the advances after quite a few trading sessions. So in terms of individual stocks and sectors, the ones that we're tracking, look at the oil and gas space, sharp up move as far as oil prices are concerned. That's given some positive sentiment for most of the oil, especially as far as the exploration companies are concerned. So Oil India, ONGC doing very well. But not only that, quite a few downstream companies too today are doing quite well. OMC as well as IOCL as well as BPCL doing quite well in the session. Motilal Oswal, the other stock on the radar, one of the top gainers on the NSE 500 index, up almost 9% on good volumes today. CG Power numbers came very close to 330 yesterday, but after that, the management held a conference call post-market as yesterday. Good commentary coming there, high by almost 8%, one of the top gainers on the F&O space. Have a look at most of the defense names today. Ahead of the budget, most of these names are seeing significant buying. Look at BML, Bharat Dynamics, Garden Reach. Most of these names up anywhere between 3 to 8%. And the entire metal pack, this particular pack continues to move higher. Names like Nalco, Hindalco, NMDC, even a Vedanta are doing very well in the session, all up anywhere between 3 to 6%. On the other hand, quite a few laggards as well. Car Trade Tech, posted its numbers, Q3 numbers just a while ago. Slightly muted said, that particular stock down 7% on high volumes. Most of the consumption names after disappointing results, disappointing commentary, talking about elevated competitive intensity. Most of the names under pressure. HUL, Asian Paint down almost 5%. And Tata Consumer Products, despite a beat on its results, down over 5% today. Manappuram, this particular stock in focus, the company's MFI subsidiary posted a loss down over a percent and a half. Radico Khaitan, after a while today, one of the top laggards on the NSE 500 index. And most of the auto names today, quite a few negative news flow that the street is digesting. Number one, the EU FTA. Along with that, today, some news flow regarding higher tariffs as far as South African market is concerned. Most of the stocks down anywhere between 1% to 4% today.
Okay, all right. Thanks very much for that, Vivek. So a lot of stocks which are buzzing around in today's trading session. Just watch out for CSB Bank, which is holding up quite well ahead of its numbers. So that stock is up around 5% CSB Bank is in focus. Also, we have a couple of other stocks such as Schneider Electric, which is seeing a good gain, up around 8% on good volumes as well as in terms of price action on that particular counter. We'll take a short break, but up next, we'll bring you excerpts from the India Energy Week 2026. Stay tuned for that conversation. Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, it's a buzzing market. Just want to point out a couple of stocks such as Motilal Oswal, which is doing well post its numbers. So that stock is up around 9.5% at this point in time or thereabout. 9% at this point, so 798 odd rupees is where it's trading at. Remember that it's reported a 6% growth in terms of revenue, which is led by segments such as wealth management. So good going for that one. Remember that there have been a couple of stocks which have come out from the capital market space which have caught interest. For example, Angel One, where the revenue was up around 11 odd %. Grow, where they did report a deal in their segment as well. ICICI Prudential, AMC, a couple of these stocks which were in focus on account of a good amount of numbers which they reported. But let's shift focus now to the commodity space. The quickest way to meet the rising electricity demand is through natural gas, says Tim Hodgson, who is the Canadian Minister of Energy and Natural Resources. From the ongoing India Energy Week, our colleague Manisha Gupta did catch up with the minister and began by asking about the rising electricity demand. Listen in.
In the world we're in today, where we are seeing the demand for electricity go up dramatically, we're all thinking, how are we going to meet that demand? That demand can come from renewables, but renewables are not baseload power. They need to be supplemented. To the extent that we can supplement them with grid storage and affordable ammonia and get to baseload renewables, that's wonderful. That's still out there a little bit. In the interim, the fastest way to get there is natural gas. So we're in Canada are focused on abated natural gas. We can look at how we produce that natural gas with low methane emissions. We can look at pre-combustion sequestration. We can look at post-combustion sequestration and drive the carbon footprint of that down. So the quickest way is natural gas for baseload power. The next quickest way is nuclear. And we're in Canada building 4 of the world's first commercial small modular reactors. We're also looking at large nuclear. I know India is looking at large nuclear. Yes. You're going to need uranium to fuel those reactors, and Canada would be a wonderful source of supply for that.
Well, that exactly is my next question. How do you see Canada and India being partners when it comes to rare earth, when it comes to critical minerals, and of course, oil and gas?
Yeah. So today we were meeting with many of India's leading energy companies. And what I heard from each of them is they're interested in diversifying their sourcing of LNG. They're interested in diversifying their sourcing of LPG. They're interested in diversifying and adding to their critical minerals stockpiles. They're obviously interested in more sources of uranium, given the big nuclear build, and they're interested in more conventional oil. We can work together to do all of those things.
How would you look at the Western world right now? So whether it's about, especially with the U.S. tariffs on so many of them, I understand there are conversations and negotiations happening. As the energy minister, what is your top priority right now for Canada?
So our top priority is to expand our international trade. Our Prime Minister has said he wants us to double our international trade by 2030. To do that, we need to sell more of what we have, which is some of the world's best natural resources. That's what we're going to do. We are looking for like-minded partners who believe in free trade. What we will tell all of our trading partners is we will not use energy for coercion. We will not use tariffs for leverage. We believe in multilateralism. We believe in free trade.
When it comes to India, what kind of conversations are ongoing? Because there have been talks which haven't gone through for a lot of time right now.
Yeah. So I think our Prime Minister has spent quite a bit of time with your Prime Minister at the G7 yes. meeting in Canada earlier this summer, on the sidelines of several other meetings. They've developed a good rapport. I think they both see a good path forward that's a win for India, a win for Canada. And I, for one, couldn't be more excited about being in this new beginning and finding a way to work together for the long-term benefit of both our countries.
And more from the India Energy Week, Amrita Sen of Energy Aspect says that they don't expect a big pullback in crude prices this year. She spoke with Manisha Gupta. Listen into that conversation. And Manisha began by asking her about the geopolitical concerns and crude availability. Listen in.
Yes, I think it couldn't have been at a better or worse time, depending on how you want to think about it. Geopolitics, 100%, like that's kind of been the biggest driver, even starting the year. We've had Venezuela, Iran, but I think Russia is really the kind of main focus. And like you said, the first question, really, how much availability there will be coming into this year. Everybody, including our numbers, they are showing these big bills. And yet, what you've seen is a market prices have been kind of edging higher. The backwardation of the crude curve, you know, basically the front month versus second month, that's really steep. And that is telling you something isn't quite adding up, right? So I've been doing some of the numbers. I've been in Asia for a good, this is my third week, seeing a lot of our clients here. And I think one of the things that's becoming very evident, unsold Russian oil on water is on our numbers. We've got a very, very detailed tanker tracking team, 140 million barrels. And I think that is the big discrepancy between, yes, it looks oversupplied, but that 140 million barrels is not available to the market. Even in India, talking to the refiners here, it does look like they've been asked to reduce purchases with the US-India trade talks kind of going ahead. And so that's where the tariff bit comes in as well. So I do think that's the big unknown in the market, is that will those sanctions get lifted? Then the oil is available and it's bearish. Our base case is that, we are very far away from peace. If that's the case, then prices can actually remain supported and even edge a little bit higher.
Most of the people believe that going forward, the first half could see the prices lower, but the second half could see it higher. What do you see playing out between these two halves?
In theory, that is the case, right? Even our price forecast, in fact, was the lowest in Q1 because this was supposed to be the biggest oversupplied market. But now with the Russian unsold, there was a big outage in Kazakhstan as well, the CPC. I'm not 100% sure we will see that big a pullback in Q1. I think in Q2, maybe because you've got a lot of refineries that go for maintenance, and before summer demand picks up, you can probably get a pullback. Second half, the reason we also think prices will be higher is because with lower prices, you should get production respond. US supplies should respond. But again, let's be very clear. Prices need to go down first before it can go up. Right now, it's still moving higher, right? And that's why I think I'm very cautious of saying first half lower, second half higher. Also, we haven't mentioned there's a massive winter storm in the US, and our upstream team have calculated we are going to be losing 9 million barrels of crude oil production. All of these just continue to tighten up the market.
And what about natural gas? Because that has been gaining only on the back of this winter storm.
Yes, $7 per MMBTU in the US alone. And of course, the saying has always been when the US sneezes, the rest of the world catches a cold. And now very much so for gas markets. Gas markets are going through a complete revolution, becoming more like oil, because in the past they were very siloed, right? US has its own market, Europe had its own market, and Asia and Europe interacted a little bit via exports. Now we've got 3 BCFD of new LNG projects starting up in the US this year, 1.5 BCFD next year. It's becoming a global market. So if the US can't export, suddenly global prices also shoot up. We are seeing some significant production losses across the board, really, as a result.
And what's your sense on India buying right now? Because with India not being able to buy that cheaper crude from Russia, problems also with Iran, how are you looking at India's import mix?
Import mix-wise, look, India has not bought from Iran since sanctions happened. Russia has obviously been 2 million barrels per day-ish, 1.8 to 2. That's the big shock to the system, right? You're now about 1 million-ish, and we think it's going to go below 1 million. Naira will, of course, continue to buy. Reliance is buying a little bit, but the state-owned companies will have to reduce quite a lot. And that, of course, if Urals is now being offered at minus 14, there's a margin impact, right? But the good news is Venezuela, there should be, companies like Reliance are applying for a license. They should be able to get that very heavy, cheap oil into the market. Some of the trading houses are also offering Venezuelan oil into India. Indian complex refiners would love that. So there's a little bit, even though the volumes are not as big, a little bit of an offset. And look, OPEC have increased production. In the grand scheme of things, prices are not that high, right? So it's still a good, very, very good time overall for refining margins. Yes, if we are talking about $85 crude, that would be a very different thing.
Okay, all right. So that's the word coming in on the commodity space. Well, back to the markets now. It's holding quite well currently for the markets. We have the broader markets which are faring better. Like we mentioned, the mid-cap index is up around 0.9%. The Nifty currently at 25,266. We'll take a short break. But up next, we'll get an exclusive conversation with Habil Karakiwala of Wockhardt on the latest developments with their antibiotic drug, which has reached the endpoint of a phase 3 trial. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, let's talk about one particular company now. Wockhardt's antibiotic for Fortescue, or WCK4282, that's basically the molecule name, has successfully met the primary endpoint in phase 3 clinical trials. It will be used for patients with complicated urinary tract infections. And we now have with us Habil Kharakiwala, who's the founder chairman at Wockhardt Group, to just make us understand what this means and how relevant this particular development is. Mr. Kharakiwala, thank you very much for taking the time out. Well, this particular antibiotic, which is WCK4282, it's met the primary endpoint in your phase 3 clinical trial. Just explain to us what that particularly means.
Very good afternoon to all of you. This is the fifth molecule from our drug discovery program of antibiotic, where we have completed clinical trials. And this was compared with the gold standard today, which is meropenem, which is used. And it was equally effective compared to meropenem. The biggest advantage of 4282 or Fortescue is that it does not add to multi-drug resistance. Whereas today, multi-drug resistance menace is mainly because of meropenem, and extensive use of meropenem has led to multi-drug resistance. So one of the major advantages of our drug is that it will prevent spread of multi-drug resistance, and it will be used as a initiation of a treatment. So we have a product like Fortescue, which will initiate a treatment in critical cases, whereas we have Zenith, which will be dealt where all other drugs fail.
Okay, just wanted to understand what are the next steps now post this phase 3?
We have completed phase 3. We will be filing to DCGI in a month or two, actually, because that is the time it takes to complete the filing and records and everything. And then we hope that we receive approval soon, because government has come with a new guideline to clear drug in 45 days, and one has to really see what really happened.
Right. Hi, sir. Good afternoon. So you have applied only on the Indian drug regulator front, right? Or will you be applying somewhere globally as well? Or is that, how does the process go from here now for that?
This is a drug which we have focused really from an Indian perspective. So we thought all our drugs we first introduced in India. Zenith is the only drug we are doing on a global basis. And that we have already applied to US and European authorities, and thereafter to other authorities, basically.
Okay, so you'll be only, you'll be looking to launch this particular WCK4282 in the Indian market first.
That is correct to begin with, and subsequently we will also apply to all the emerging markets.
Okay, but you know, if I remember correctly, Mr. Kharakiwala, you've said for Zenith you've received a lot of delays in the Indian regulatory process. For example, you've said that, you know, you probably don't even think your file was reviewed very easily, or there were delays in terms of review. Do you think that you're probably going to face the same kind of issues with WCK4282?
I hope not.
I mean, where is the process? Have you spoken to the regulators?
No, see, the question is, once we make an application, then only we will have some idea, okay, what is the regulator view. And government has come out, as you know, with a new guideline, where they are really focusing on faster approval of all drugs. So we hope and we expect that our future application will go on relatively on a faster track. And we hope to receive approval in due course of time after that.
What is the potential of this drug?
Today, you know, meropenem and similar drug which are used, they cover roughly 28 lakhs patients in India. So from that perspective, Fortescue will act as a more preferred choice against meropenem, because it prevents development of other multi-drug resistance. And from all point of view, if we want to control multi-drug resistance, we have to go with this safer product, which are equally or slightly better effective than the existing therapy.
Sir, so what is the potential number over there for the Indian market? And also you said later on you would go to the emerging markets. If you could give us any indication there as well, what would be the size of this market?
It's the potential of this market would be of the order of something like about 1,000 crores, more than 1,000 crores in India potentially.
Okay.
And we hope to get a significant market share over a period of time.
Okay. All right. Well, Mr. Karakiwala, I just also wanted to get a quick update with regards to Zenec. The last time you had spoken, there was the accelerated approval in Europe. You're still pending that approval in the US. Any updates that you can share with us from our last conversation?
The only update available is as far as the US FDA is concerned. They have visited all the manufacturing sites, which is okay by them. They've more or less cleared it with minor observation here and there, which is in a matter of 1 week or 2 weeks, it will get cleared. They also completely review our clinical data. They were there in Switzerland for about a week or so. And it is still going on. As once it gets over in the next few days, we believe that it will be relatively smoother sailing now onwards for the way to approve the product as far as the US is concerned. We have no news as far as the EU registration is concerned.
Okay, so when can we expect that US approval then?
As we mentioned earlier, it should be sometime in the middle of the current calendar year.
Okay, all right. Mr. Karakiwala, always a pleasure speaking with you. Thanks very much for joining in and speaking with us and giving us an update on WCK4282, which is their latest antibiotic. They are looking to target that for the Indian market. They've completed phase 3 trials at this point in time. We'll take a short break. We'll get you a lot more on the markets once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC-TV18. As of now, the markets have come off from when we started the show, right? 25,300 above that, what the Nifty was trading at 12 p.m. And now look at it, it's at 25,260. So 50, 60 odd points, it's come off from when we started the show. And specifically in the last 1 hour, what we've seen not doing well, NTPC, BEL, that's seen a bit of a fall as well of almost 1% from the time we started the show. But that's all the time we have on this edition of Halftime Report. Thank you so much for tuning in. Up next, your business lunch.